welcome to another episode of Sparkling Conversations. And today I'm honored to have with me Ms. Gabriela Figueiredo Dias. Gabriela is the chairperson of the International Ethics Standards Board for Accountants, or IESBA in short. And IESBA, of course, is the global standard setter for ethics for accountants all around the world. So Gabriela, when it comes to ethics, I remember when I was studying or when I was starting out in the profession, whenever I see all these case studies, right, or reports of scandals, the issues always seem so obvious. But probably because all the information is pieced together very nicely for you and you've got full information with hindsight. But of course, as I got a little less young, then I realized that things are not always so straightforward. There are many gray lines. So through your engagements with senior finance leaders, have there been any examples of borderline ethical dilemmas which really stayed with you throughout time and which were memorable, maybe because they weren't so obvious?
Thank you very much for the opportunity, for the question, Terence. As you may know, before being in this role, I was a regulator in capital markets. And through the years and with all the experience that I gathered, I must confess that I saw quite a number of situations of ethical dilemmas faced by senior finance leaders, which were not necessarily obvious or that they hadn't seen as being obvious. But for me, it's clear that these dilemmas exist and that they are sometimes not evident for everyone. But if you ask me for examples, I can give you some examples of ethical issues arising for financial leaders, some cases, and I can name them because they are public cases. For instance, the Wirecard scandal a few years ago in Europe, where the CFO finally resigned when he realized that there was an issue, a big issue, but this was not so obvious for the CFO until the moment where he saw the consequences of probably some doubts that he has not resolved or some light approach to some ethical issues that arise over the story. There was a case in my own country, and I don't know if you don't know, I'm from Portugal. And there was a big scandal years ago with a bank, the biggest Portuguese bank, Banco Espírito Santo, where there was a significant involvement of different senior financial leaders who were involved in a case of fraud, a false financial information, a scheme that has been conceived to get money for some of the shareholders, not for everyone. And this all seemed okay, according to the practice, We hide here a little bit of information, we do a little bit of engineering there, we don't report because we are close to the CEO when we are working together. That finally resulted in the bank being resolved, so it collapsed with thousands of investors losing all their savings, losses of more than 2 billion, which in Portugal, my country, means a lot, and a lot of people being sued, imprisoned, etc., from the CEO to the CFO, auditors, etc. So it seemed that it was just an accumulation of small things, but then it became a big case. Another example, just to go to another area, on the tax services that accountants provide, the Starbucks case, which is known by everyone, everything seemed okay because they were just making, the financial leaders were just making use of very friendly frameworks in different jurisdictions, doing business fragmentation to profit from these different approaches, and at the end paying basically almost nothing in the country where they were based, when you could see the millions, the billions that they were making in terms of profit. It was not obvious that there was an ethical, actually there was an ethical issue. Well, everything seemed compliant. The financial leaders had the conviction that because they were compliant, there was no ethical issue. But ethics is about something different, and in the end, they realized that they needed to pay for everything because otherwise their reputation would go so affected that maybe the business would not be resilient to this impact. Things are not black and white all the time, and the professional accountants and senior finance leaders need to step back and think about the ethical dimension of the issues.
Yeah, and that's true, because many professionals would like to think that, that, oh, I'll know an issue when I see one, right? So, but sometimes there's so many different things that come to play. There could be culture, pressure, like say, not enough information, sometimes too much information. So, in your view or your experience, where do you see the biggest blind spots, maybe, perhaps, or where even experienced leaders sometimes misjudge or underestimate?
Well, there are many reasons for that, but I think that the main reason that I would cite out there is a certain lack of awareness that ethics plays a role in the game. The blind spots may come from pressure from the client, pressure from the management, may come from incentives which get the financial leader blind for some consequences that may arise from the conduct, may come from a lack of competence, lack of knowledge to understand the reality, or in some cases, many cases actually, from familiarity and dependency and etc., which unconsciously leads the financial leader not to take some considerations seriously when making decisions. The problem is that there is not a willingness to do the wrong thing, but there is, as you say, a misrepresentation of the risk, a misrepresentation of the threats, because there is an objective, there is a goal that needs to be achieved, which leads the professionals to disregard a certain circumstance or a certain context, and not taking one important step, which is to step back before moving forward.
I believe in your current role and your previous roles, you've engaged with many CFOs around the world. So, to you, what do you see today as some of the most pressing challenges that CFOs face? And how is IESBA sort of considering all these things in its work?
Well, the role of the CFO is really evolving, and it's evolving on the one hand because it's being impacted or affected by some external trends and developments, but also because in the organizations there is a trend to value and see the CFO in a different way. To be more concrete, in terms of trends or in terms of developments impacting the role of the CFO and making it evolve, we have, for instance, sustainability reporting and sustainability considerations beyond the reporting. We have technology and AI, most particularly significantly affecting the way they perform their job. You have different governance considerations in terms of what's the role of the CFO, and probably more recently, there is a significant focus on competitiveness, on profitability, which puts additional pressure and additional requirements on the CFO. But at the same time, the role is evolving in the sense that in terms of the governance of the companies, they really have different responsibilities. I'd say additional responsibilities, additional visibility, exposure, scrutiny, and they are becoming more go-to person. So if in the past they were more someone who was in charge of making sure that the financial accounts were correct, complete, and did not have to make many decisions, that's not a reality anymore. Because even if they don't want, even if there are no rules saying, well, the role changed, the fact is that they are in the crossfire of all these trends and evolutions, which force them to make choices, options, in terms of sustainability reporting, in terms of the use of AI, in terms of the pressure, the incentives that they are given to achieve certain results, and etc. And as you go and you have to make more decisions, the risk or the possibility of facing ethical dilemmas is, of course, greater, bigger. There is a case to think about how are the CFOs equipped to face these ethical dilemmas that they are growingly facing. And what the IESBA is doing is to address this topic by trying to make sure that the Code of Ethics, which is our main product, the Code of Ethics is still fit for purpose to respond, to guide, to support professionals in dealing with these ethical dilemmas, and at the same time trying to understand if there is anything else that we can do to provide them with the necessary guardrails, the necessary support to help them making the right decision in the right moment.
Yeah, thank you, Gabriela. That's very comprehensive. So I'll just end off with one question right now. So if a CFO or a senior finance leader in Asia approaches you and asks you, what's one thing I could do this year to sort of strengthen my ethical leadership, what would you tell him or her?
Well, I think that first of all, it's to try to improve awareness of the existence of ethical dilemmas and ethical issues, which is not always the case, and address them, solve them by using the basis of our Code of Ethics, which are the 5 fundamental principles, which respond very clearly to these ethical dilemmas: objectivity, integrity, confidentiality, professional behavior, competence and due care. Use these 5 principles properly, and it will help improve your ethical performance. And also what we call the conceptual framework, which guides you through a process in terms of how you approach the problems to make sure that you come up with a good solution. I think you'll probably think it's too basic, but it's fundamental. And if you do take these 5 fundamental principles seriously and use the conceptual framework to solve the problems, then you'll be, as a CFO, already in a very good position to face these dilemmas and solve them properly, taking into consideration the risks that not facing them and not solving them involves for yourself as a professional, for the company to which you work, for the profession as a whole.
Right, thank you so much, Gabriela, for being with us today. Look forward to more great work from IESBA, and I hope you also enjoy your time in Asia. Thank you.
Thank you very much.